Hey, it's Clay, and this will be a video chart on ticker symbol NETE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually just today's price action broken down into 30-minute time slices. I like through this time frame, then it's a good job of telling the quote-unquote story of the price, and then just makes mapping out and summarizing, this chart quite straightforward. So to say, Clay, look, just summarize things. I'll be fully honest, this is a pretty sketchy chart, pretty shady, and kind of confusing. There's a lot of gray area. I mean, you stop and think about it, the price made a great move, and then the price had this very deep pullback, but it's not like it's a crash because, the price does still have the opportunity to build some higher bases. There's just kind of a lot of dynamics going on here. So what I want to try to do is really just simplify this. And in my mind, the easiest way to kind of assign some black and whiteness to this is in regard to the $5 mark right here. So why is $5 so important? Well, let's go through a couple different scenarios. For first scenario, and I'm not saying this will happen, but just one potential is the price comes back to $5 and then breaks below it and then sinks down below it. If that were to happen, what would that give you as far as the chart is concerned? That would give you the price right back to where it started before the big move occurred. And that would basically put the chart at pump and dump status because, you stop and think about it. We've already established the fact that the price has made a very nice move. But then within a relatively short amount of time, if the price literally goes back to where it started, that is the epitome of a pump and dump. Great move upwards, and then all of a sudden the price right back to where it started. Again, not saying that's what's going to occur, but that's why that $5 mark is pretty important if the price were to separate to the downside from it. Now, what about if the price were to come down here to $5 and then behave in this manner and start to work its way back upwards? What would you have here? Well, you'd have a set of lows there. You'd have these lows right there. If you picture each one of those as stair steps, well, hey, now you have stair steps making progress in the upwards direction. That's what truly strong moves do, right? They're going to make progress forward. So at the end of the day, $5 is kind of like a vocabulary definer. It's telling us, is the price making progress, again, associated with bullishness, or is the price going back to where it was? Going back, quote unquote, associated with bearishness. So keep an eye on $5. The week is young, still 4 days left. So I'm very curious to see how the price reacts and whether or not the price can actually make progress, or if the price is about to go back to where it was. We shall see. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.